Redfin releases a recent report that is pretty astonishing. Home sales fell to one of the lowest levels on record in May. I'll share with you more details on this article as well as how San Diego home sales are doing in comparison to this Redfin article. Jerome Powell is committed to getting inflation down to 2% while maximizing employment. Well, unemployment is starting to soften. I'll share with you what this means for the real estate market, and more importantly, I'll share with you how California's unemployment rate is compared to others. More news on mortgage applications. I'll share with you how to interpret the data and what it means for you as a buyer or seller. All this covered here in this week's San Diego Market Matters. I'm Karl Kyler, your San Diego Realtor. Let's jump into it. Real quick, if you appreciate the information I provide in these videos every week, consider subscribing to the channel and liking this video. And if you're thinking of selling or buying here in San Diego, check out the link I have in the description below where you can schedule a meeting with me so we can discuss your goals and how I can help you achieve them. Now, on to the good stuff. Redfin pulls the data and determines that over the last decade, all the way back to May of 2014, there have only been 2 other months with fewer sales than May of 2024. With high home prices, elevated rates, and still a lower inventory than pre-pandemic levels, though it is growing slowly, buyers are tired and over it. For everyone who bought over 2 years ago, that's awesome. It's really great to have gotten in early before rates took off, but I'll tell you this, I've never seen so many upset buyers in the market. It was so competitive and so many buyers got priced out because prices were going up so fast. I get that now is not an ideal time when it comes to prices and rates, but I am happy to see the shift in power come back to the buyer side some. According to Redfin, home sales dropped 1.7% month over month, seasonally adjusted in May, and 2.9% from a year earlier. Prior to this October of 2023, when rates jumped to a 23-year high, maybe you remember this, they almost reached 8%. And May of 2020, when the onset of the pandemic brought the housing market to a halt, these are the only 2 months with sales lower over the last decade. Here's a home sales chart according to Redfin's data. You've got less home sales happening right now than you did in 2014, 15, 16, 17, 18, and obviously 20 being the very weird year and the 3rd lowest month in the last 10 years. This really shows you where we're at historically. I mean, we're damn near 2012 levels, which was the complete bottom of the market. And it took from 2012, 3 years to get home sales up to nearly 5 million annualized. Bottom line, it's gonna take time for home sales to pick back up. It continues to get better though. Redfin also reports that home prices hit another record high in May, all the while mortgage rates were sitting around 7%. Redfin cited a 5.1% year-over-year rise in the median home sales price. Now, let's see if this is consistent with San Diego. Now, check this out. In May of 2023, there were 2,229 homes sold. Fast forward to May of 2024, there were 2,029 sold. That's almost a 1% decline in sales. So in regards to home sales, San Diego is mirroring the same trend nationally that Redfin reported on, though slightly different in volume, but nevertheless the same downward trend. As for median sales price, San Diego came in at $920,000, up from $845,000 1 year ago, about a 9% increase in price. Again, mirroring the same trend that Redfin reported nationally. As important as it is to know how the market is doing nationally, it is always advantageous to compare national trends to local markets. There are some markets that are not mirroring these numbers that Redfin reported, and at the same time, like San Diego, there are markets that are mirroring the trend, but are reporting different percentages of decline or growth. All right, now let's get on to the next topic. Jerome Powell, head chair of the Federal Reserve, and his board have been tasked with getting inflation under control while executing a soft landing of the economy. A soft landing is essentially this. Before the economy breaks, the Feds will lower the Fed funds rates to promote or sustain the market to keep it from going down the drain. One of the leading factors that Jerome Powell is watching is the jobless claims market, not the unemployment rate. I really think that jobless claims is a great metric to determine when the Fed will pivot on the Fed funds rate. Sometimes people can get so caught up with what is happening in the stock market and use that to determine the state of the economy. This is extremely inconsistent, and a really good example of this is Tesla. Tesla stocks may be looking really, really good, and at the same time, Tesla could be doing massive layoffs. So companies could be doing really well on paper, all the while jobless claims are going up. Jerome Powell even said that if the unemployment rate went up some basis points, it wouldn't affect their decision. And guess what? It went up and they held the Fed funds rate. Nevertheless, we recently hit a national unemployment rate of 4%, a high since 2022. And get this, if you look at the map of state-specific unemployment rates, California leads the way with a 5.3% unemployment rate, highest in the nation at the moment. Though this may not be alarming right now, this is probably a metric to keep an eye on. According to Logan Mohtashami, economist for Housing Wire, his point of focus is what the Fed focuses on, and that's jobless claims. Mohtashami believes that the breaking point of the labor market will come at 323,000 jobless claims. As soon as the jobless claims market hits that number, we'll officially be in an economic recession. As of June of 2024, jobless claims came right under 250,000, so we have plenty of room for the Feds to still adjust if claims trend upwards towards 300,000 or more. Mohtashami is also regularly known for saying labor over inflation. With last week's CPI reports coming in lower than previous months and jobless claims well under 300,000, the likelihood of a rate cut is low. In the eyes of the Fed, they just don't see it as being necessary. Keep in mind that there are other factors that affect mortgage rates. Though the Fed funds rate has an indirect effect on mortgage rates, if other economic factors start to adjust, we may see a drop or rise in mortgage rates. All right, let's keep moving this ship forward. Mortgage applications are down in comparison to the last 2 years. Keep in mind, we started to see a major descent in applications in mid-2022 when rates started to get jacked up. Mortgage application and sold data is extremely important to be mindful of when interpreting what's happening with the market. You know, if someone told you that they sold their home for X amount of dollars over asking and had multiple offers last year, you wouldn't expect that this year, because if you look at the mortgage application data, you'll see that there are significantly less buyers in the market and more inventory than there was last year. This is extremely important to be mindful of when pricing a home for sale. Now, mortgage application data did increase 0.9% from last week, and the seasonally adjusted purchase index increased 2% from last week as well. But we are still 12% lower than we were the same time last year. And we have more inventory on the market both nationally and locally. These slight increases could be indicative of a summer push or the slight adjustment of mortgage rates coming down right below 7%. At the moment, we're at the lowest level of demand since 1995, even lower than 2010 to 2015 during the Great Financial Crisis, where we had ridiculous unemployment rates. It'll be very interesting to see if mortgage applications continue to go up if rates stay at 7% or below. These buyers entering the market will see that with the increase in inventory and the diminished number of buyers on the market, they will not be as rushed to make a decision on a property. Instead, they could take a little bit more time finding the best fit property from what is available. That's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to the channel for weekly updates on the San Diego real estate market. And if you're considering on buying or selling a property here in San Diego, don't hesitate to reach out to me for expert guidance tailored to your needs. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you in the next video.